everyone. Welcome back to this weekly market update. It's been a while since I do my last update since I was away from some of the personal matters. So coming back to the week, coming back to the market, coming back to the weekly market, of course, weekly market update. Of course, I would like to have a glance of the whole overall market before I make any decisions on trading on investing. So this week market update is actually just a broader view of what happened over the past 1 month, and also coming up things to watch out for. Don't be too impulsive of entering into the market if you have not prepared yet. But of course, if you have been monitoring any certain counter, that you have been putting into your watch list monitor for weeks, then make your decision wisely. Enter into the market, just protect yourself on the position using stop loss. All right, so let's go into the but before that, remember, I know that I can see that there are a lot of people actually viewing on my Facebook page. If you have not liked, please remember to click on the like button. Remember to follow me on my Telegram, and also remember to follow on my YouTube video as well. So let's start. What happens? We can see that the market has been doing a lot of bouncing, especially when I'm not around. Right, there's been a huge drop in the Dow Jones index in the US indices itself. Correct now, especially on the Thanksgiving on the US market on the day, there have been a great drop. All right, so a lot of things is happening, especially for the come last Friday itself. Right, there's a inflation fears coming in. All right, because why? Because the November data, all right, the inflation's actually surged 6.8% in November, and this is even more than expected, to the fastest rate since 1982. Of course, I mean, you don't expect the inflation rate can be slowly grow with the money that has been tapering all along, and with a low rate of interest, right? That Fed has not made any decisions to buy back the bonds, to taper, to increase the interest rate, which is the way to reduce the inflation. Everything has not come into place. That's why the inflation fear is there at this point of time. But then usually the weird thing is when the inflation rise, people know that Fed will come into play, to increase, to hike the interest rate, and then it will bring down the inflation fear. And it also, when interest rate hike, it will also bring down the equity market as well. Correct or not? But the thing is that the equity market closed record, all right, rise to record close Friday despite the inflation fear. So how is this possible? All right, how is this possible? I mean, looking at a chart, there's definitely explanations, but on the fundamental wise, I try to think it as simple as possible. Going into inflation is one of the good things because the economy is growing. Correct or not? The economy is growing. I mean, the country is growing, is strengthening. So that's why people believe that the company will continue to perform well, and that's why they go into the market. All people believe that this news, all right, is actually expected news. All right, that means they have already the fear has already go over. All right, the fear has already go over. So this news is actually a good news. It's not any uh sudden spike of the news, just like COVID, that will actually tumble the market. Or correct or not? So it becomes bad news become good news, and good news become bad news. All right. After all, it gives a confirmation because market dislike uncertainty, which I mentioned previously as well. All right. So what happens to the market? The market rose, on last week itself. We can see that all the three major indices have been going up on last Friday close. All right. So we know that the coming weeks, things to watch out is the inflation, all right, because the inflation has expected more on November itself. A lot of things rising, price for food, energy, everything. So we will look into, if let's say Fed decided to hike on the interest rate, how does it correlated to commodities? Because by right, it's inverse relationship. That means when interest rate go up, commodities will come down because dollar strengthen. We'll be looking into this particular sector later on in the chart explanations. All right, next. So for the coming weeks, things to take note. Things to take note. Why? Because there will be a 2 days meeting on December 14 and 15. All right, it's a Fed Reserve meeting. They are going to discuss, all right, on whether to end, all right, the bond buying program. That means taper will kick in place, and then they will also have a signal that they will hike the interest rate sooner. All right, because previously we know that they I think they're trying to calm the market. They don't want to tapering and high interest rate concurrently in next year. All right, it will bring more fear to the market. They don't want the market, they don't want to tumble the market, right? Because they actually bring the markets, they spend so much time, hard work, try to maintain the market, maintain the economy. They don't want to be the bad guy to tumble it. So previously they mentioned that the interest rate will actually hike in 2023. All right, 2023. But then, right, this meeting, a lot of people is actually expecting, all right, the upcoming projection of Fed is expecting that by right, the first hike will be in 2023, but this is likely to change in the updated forecast and possibility to hike, all right, in the coming year. All right, to hike in the coming year. So you see, which I mentioned in my video, I say that when you buy back the bond purchase, hike interest rate hike will come in. If you want to separate apart, it's possible. I mean, how will the market react? I'm not sure, but the inflation will still continue to be there, right? Because both they pumping free money, lower interest is both causes the market to go in high inflations. Reduce one, will that give any impact? Might not. So they actually say this upfront first, might have interest rate to prepare you again. All right, to prepare you again. Don't want to give you a sudden bomb, correct or not? So this give them the reason for them to have the reason to hike without market fear. Okay. So next is the thing we want to share. We know that DD, if you are paying on this the company, what happened to DD is actually a Chinese related company listed in US market. So right now they are delisting. So delisting meaning to say that they are not totally off. It's just that their shares become over the counter. It's not going through the exchange. All right. If you have been paying attention to previously one of the counter like Luckin Coffee also delisted. A lot of fund house, I think Muddy Water actually stepped in to say that Luckin Coffee actually they do some fake reportings, earnings reports or their revenue. All right, that's why the market tumble, then they delist. But since they delist, the market has been going up in the over the counter market. All right, so right now DD is delisting, but what is the panic of this thing right now? Because they actually delist due to the Chinese government step in. We know that, all right. The, this actually rise the politicians between US and China. This give a lot of people to worry on those Chinese listed shares in the US market, such as Twtr. But of course, those like Neo, all right, like Xpeng, this kind of XEV company. But of course, company which have solid background, which is dual listed in Hong Kong and in US market, somehow uh, tend to ease the market fear, because if let's say they delisted in US market, they still have the shares in the Hong Kong. You are able to convert your US shares to Hong Kong shares and no much big deal. It's just that they will lose more access to the broad pool of buyer in the US market. All right, but your shares is still there. It won't go into the delisted market, right? The over the counter market. So owning certain shares like Baidu, like Alibaba will give you more confirmations instead of owning a single share listed in the US market. So this actually bring the fear to the Chinese company. If you want to invest in, you actually expose yourself to a couple of risks. One definitely will be the company risk, whether the company is earning money or not in this downturns economy. Second is the politician risk, whether the Chinese will step in, say that their regulations, everything will impact the company's earning. All right, will impact just like how they impact DD, will bring the additional fear to the market again. So people will then tend to go into the US counter instead of Chinese related counter, whereby there is a lot of opportunity over there, especially Baba is at right now 120. A lot of people is eyeing in Baba. A lot of people is eyeing in Pinduoduo, used to be 200 right now. I think it's $60+. We'll look at the chart later. All right. So a lot of people is trying to do bottom picking, bottom fishing, but you will never know where is the bottom. So remember, for this kind of good company, if you think that you will last for the next few years down the road, you might want to do your planning on such one of the method is called dollar averaging. All right, or otherwise, please put your stop loss. When it hit, you just cut it. All right, do not buy and pray, plan and buy. Understand that is the two different things. All right, next thing, Let's go into the chart. So right now we look at the chart, we can see that this is what happened on Dow Jones. Of course, I removed previously what I forecast, right? Because it's been a month. So let's watch out. For this coming month, we can see that the coming week, we can see that market has dropped, all right? But then it rebound back. This drop is actually significant if you have been watching on the uh, charting itself, because it actually pulled back to 34,000. Firstly, it's a round figure. This is a day chart. It's a round figure. Second is a support area. All right, it's be a support. Yeah, it has penetrate, but it close above. Penetrate, close above. And thirdly, right, it's actually resisted by 200-day moving average. All right, it give many reasons for this rebound to bounce up. If you still think that you have a strong to come down after a green candlestick, hopefully you put your stop loss. Otherwise, there will be a bigger, bleed for you. So right now, what happened in this pattern, right? We can see that it's like a broadening formations. Broadening formation, that means that the risk is higher. All right, you will go up to the previous high again at 36,500, 36,600, and it might even penetrate to go up because there will be a second resistance, a bordering formations. So we are looking at 36. Once it penetrate, we are looking at 37, 1,000 steps. All right, 1,000 point each steps, and then we can see whether it penetrates from here. Of course, trading in the bordering formation triangle, the risk is higher because your stop loss is further. All right, so take a look at these 2 points. To my expectations, if let's say over this weekend the market interest rate, the Fed really hike the interest rate, really announce when are they going to give the interest rate hike, right? Yes, contemporary might have some spike down, but this certainty give the market more confidence to buy in as well. All right, especially there might be a January effect. January effect meaning to say that a lot of there will be more bullish than bearish. All right, this downturn, right, might be people actually cut off their losses, so that they can claim their taxes in December. This is during what happens. All right, they file their losses, so they reduce their taxes to pay. All right, so this usually happen in December, but it might happen in the early December during the Thanksgiving. We won't know. All right, so in the market perspective, from the candlestick perspective, we are looking at more on the upside. Uh, but the first resistance is 36,600, followed by 37,000. Okay, so there's my first view. Look at the broader view from the Dow Jones Index first. Then second, we'll be looking into the next index, the Russia. Russia index, why after big cap we go into small cap, right? Okay, Russia index, I explained previously, the market has been range bound. We can see that there's a very big bull trap. All right, this is a bull trap because people know that this is a resistance level, right? Once it break, it should continue to go high, throw back, go higher. Correct or not? But then it's a very big bull trap. Why? Because after the trap, people who entered here right now is all being trapped at this price because it's still at the ding dong way. Correct or not? Okay, so right now we know that the major big market has been dropping, all right, because the Dow Jones index is dropping, few shares is dropping. Right now, Russia index, the firstly is still below the resistance level. Okay, second is below the MA level, especially the 200-day. All right, so if the market failed to come back again and continue, especially it touch the below, we can see more downside. All right, for the small cap, but with the January effect usually small cap will boost higher. All right, so I don't give any direction at this point of time. I need a more confirmation of either each way break. All right, for Russia 2000, we can play based on a breakout strategy. All right, breakout strategy, whether it hit the resistance or the support level. All right, so right now it's still at a sideways for Russia 2000. Next, we go into the Asia market. We look at China A50. So for China A50, okay, we can see that the market has bounced back. Previously, I said pull back, bounce back, right? It pull back, bounce back. All right, right now it has been on the previous resistance. Can you see resistance? This is like a head, shoulder, shoulder. Okay, so is there any direction? No clear direction. Based on candlestick is bullish, but we might see whether it penetrates here or not. If yes, then we'll go for the next high again. All right, on the weekly chart, it is more consistent. All right, it's still on the uptrend. We can see on the weekly chart, it's still on the uptrend, and this candle is a very bullish candle. All right, if it continue, all right, if it continue to form the candle, we are looking at this target. Okay, so this is what I mean by which wait for the confirmation to come in. Okay, let me speed up my process because I don't want to drag too long, although I just come back. Next I'm looking into dollar. All right, dollar, we know that. Take note, don't impulsive go into it because we don't know what happened on the Fed unless you want to take a bet. All right, previously I mentioned that dollar has been more strength, all right, going upwards before my last video, 5 weeks ago. So it hit, this is a major area again. Why? It used to be a previous support, correct? It used to be a previous support, resistance. All right, this is a very crucial area. So right now the height, we'll see whether the dollar will gain any strength from here or not, because when you hike the interest rate, dollar usually will go up. On a candle perspective, all right, this is the weekly chart. We can go into the daily chart. It's the uptrend, correct? It's the uptrend. Okay, if we break this line, we are looking at $98 first. $98 first. All right, just nice coincide with the Fibonacci level. All right, $98 first. So watch out. uh to me, I feel that there's a high chance you will break 98 lah. Personal feel, all right, personal feel. But of course, you can't use instinct, right? If you want to use instinct, then also remember to put your stop loss to protect yourself. Okay, next we are looking into gold. I don't want to show it because it's sideways. Right now I'll show you something is copper. Like I say, how it actually uh increase of dollar actually is an inverse relationship for copper. Okay, I mentioned copper previously lah. I said that copper will go up, in June. Yes, continue to go up all the way. So right now copper has been stuck within the Fibonacci level, 100%. All right, this one all pull away. This is since 27 June. Okay, so just pull away all this thing. Okay, so since we use the lowest point to the highest point right now, it seems like a double top. Okay, it seems like a double top, but it haven't break lah. I mean, you want to prove a double top, you need to break below the resistance level, right? Once it break, we are looking at 61.8% Fibo. All right, 61.8% Fibo for copper. All right, so just nice for the moving average to catch up as well. So I'm more on the downside for copper, especially on the commodities lah, on the commodities itself. Okay, so more on the downside for commods. Okay, so next we are looking into Brent as well. Okay, Brent, couple of things to take notes. Okay, let's look at the weekly chart. Okay, so it touches here. By right, you should have some warning sign lah, because it used to be a resistance, support, support, resistance. So you want penetrate, you need a very good view, especially after since April 20 all the way high. You need additional strength to break away. You need a huge market strength out behind that, right? But right now with the uh, dollar increase, we know that commodity will drop lah. So this is one point you should watch out. If you miss this point, you are still holding, then don't blame people, right? Because you don't analyze the chart. All right, next thing, watch out, things to watch out because of this news. All right, US is going to sell 80 million barrel of oil from the reserve on December 70. More supply flowing out. All right, more supply flowing out. So we might see a further drop, but this is a really chart. Continue to monitor. Is there any entry price? I think that right now it's actually at the shoulder head. We are forming the shoulder. So here is a good support area. Unless it breaks successfully, then we might look at the next high. If let's say it has been ding-donging around here, it's a good chance you put some stop loss and then you short it down. All right, so that is my take for oil. Okay, that is my take for oil. I will write later lah. I will write in comment later and then screenshot, put into my Facebook page. You can just review it. All right, next counter, we will be looking into the Chinese shares which I mentioned. Baba. Firstly, Baba. All right, so Baba, we know that it's very low. I see here is a good area, congested area to pick it up. All right, but we go below. So remember I say it's dollar averaging. Even though I pick it up here, I'm not worried because I don't throw in my whole war chest in, right? I divide into few portions to accumulate slowly. All right, I accumulate slowly. So this is the weekly chart. Go into a weekly chart, accumulate, especially there's a gap. Right now we are still waiting. People who have not bought their first purchase, 120 is actually a very attractive price. You can nimble a bit. If you drop below 80, you can nimble second time. All right, so because there is a dual listing, I'm not that concerned comparing to single like DD shares. All right, so a lot of people has a fear to pick up. Like I said, there's two risks: politicians and government. Correct? Politicians and the company risk. All right, Pinduoduo, you see all-time high 210 right now, just less than a year. Where are we earning 54? All right, it's cheaper than 50, 75%, I guess. correct or not? And this is a very good support area. It penetrate right now, it bounce back. So we might see that if let's say this area, all right, showing a significant bounce back, break above the previous low, right, it might actually continue to go up already. So this might be a bear trap. All right, bear trap. So watch out. All right, so where is the next resistance? Based on previous, is over here, 43. If this is a bear trap, it's good to pick it up. All right, Twtr is a very strong company as well, so don't doubt on the fundamental unless they're doing some hanging banking behind, which I wouldn't, me and you wouldn't know, right? So we just have to manage our own risk. Okay, next few counter. I'm not going to introduce much. I just want to recap what I have shared previously. So remember, on this Twtr, right? I said Twtr, target 58, 52, TP revised to 49. Eventually go to 41. 30 October is my last. All right, 30 October. So if you have been watching my video, if you have picked it up here, somewhere here, after the huge drop, then 49 is a good, decent profit, right? So if fulfill, it hit my target. Congrats to people who followed. Next on Lyft. All right, Lyft, I mentioned, I give three big arrow, three big entry price. All right, where were we previously when we talked about this? 30 October is here. I remember correctly, here. All right, I say it touches support one, twice, third. How many times? After it touch, all right, forming a descending triangle. And then I draw this tree line. I say that you can short on the current market. You can short for the pullback at 61.8%. Saw that for FIBO. I can say that you can wait for the descending triangle to pull back. Just nice. People who waited, all right, shorted when it resisted by 78.6% FIBO, resisted by the descending triangle, you have mount the greatest profit. All right, so this is what I mean. Plan your trade and trade wisely. Even though you short here, your stop loss should be somewhere above, right? Because you are still within the descending triangle. You short here, you still be somewhere above. You shouldn't get stop up. Of course, your P&L, your profit risk reward might not be enticing. All right, might not be beautiful, but you are still in the correct method of trading, right? You plan your trade. So congrats people who actually initiate at the third arrow. Someone text me. Congrats. Thankful that you followed as well. All right. So it's been a quite a long video for today. So I have no good new counter to recommend for this week because I just come back. I don't want to throw in any random counter put in your watch list. But like I said, you can continue to monitor what item, copper, Russia, all right, copper and Russia, and Brent. These three things you can monitor, all right, to see is there any opportunity right now or not. Okay, so watch out for the 14 and 15 December on the Fed news. See how does it impact the market itself. All right, so that's all for this weekly market update. Welcome back to join me. Thank you everyone for staying as well. Have a nice weekend. Goodbye, everyone.